Time now for our weekly market monitor, who has stock picks that he says you will want to own if you believe the economy will continue to grow in 2019. Steve Chiavarone is the portfolio manager at Federated, joining us tonight. Steve, good to see you again. Welcome back.
Happy New Year.
And you start with AbbVie, and this is a dividend play for you. Is that the reason you like this one?
Yeah, the general theme is we want to buy some of the things that have been beaten up between September 20th and Christmas Eve. Dividend stocks are kind of the opposite of that. They had gotten beaten up until September 20th. As the market was rallying and interest rates were rising, there was an expectation that the Fed was going to raise rates 4 times a year between then and forever. Well, the Fed's already dropped next year's kind of rate hike expectation down from 3 to 2. We doubt that they'll be able to hike at all in 2019. And the dividend players are getting a bit of a bid, particularly because they're a little bit more defensive. So AbbVie is a great example of this. They've got a yield that's almost 5%.
Yeah. And
they just signed this settlement with Pfizer, which ensures their key drug Humira will continue to generate cash flow, should support the dividend, and allow them to invest in new drugs.
Your second pick is Amazon, and this is a good example of the market versus the economy. Amazon had its record Christmas this year, but yet the stock is down 34% since its high in September. You like it because of the decline, or what's going on here?
Yeah, we think that there's a number of names that have been priced for recession without a recession coming. And so what you have here is the consumer is quite strong. We see that. Not just did Amazon have their best orders, but we're having the best holiday shopping season in 6 years. AWS continues to do well, which is their cloud business. Some of their other initiatives around Prime are doing well as private label and Alexa. And so you have a name that we think is overly beat up. It's a cyclical name, but we think it can rebound from these levels, and you've already seen that over the last couple of days.
And finally, you've got a small semiconductor company, Diodes. Yeah. Now, we've heard from other money managers who like the semiconductors, again, because they feel like they've been beaten down too much, just like you feel about Amazon. Why don't you pick one of the bigger guys? Why choose this small cap in the semiconductor area?
Yeah, Diodes checks a lot of boxes. So number one, small caps have gotten beaten up when rates were rising, because 50% of their funding is variable. It's variable interest rate versus large caps where it's only around 10. So as rates fall, and we've gone from 325 on the 10-year down to below 275, that should provide some relief. So that's one. Number two, small caps have underperformed by about 7% this year relative to the S&P. We think there's some catch-up.
Right.
This is a name with high foreign sales exposure, so the dollar weakening a little bit helps. And it's also related to trade with China, which is where it sells a lot of its goods. So any progress there helps as well. So it's kind of all of these themes put together in one stock.
Steve Chiavarone with Federated again. Thanks for joining us. Appreciate it. Have a good New Year.